What's up guys, my name is Kasper and you're watching CryptoGo's Experience channel. Today I'll talk about cryptocurrencies and different ways you can capitalize on them. Enjoy this little presentation. Today in this presentation I'll go over different ways that I use to capitalize on crypto. I will also cover some basic strategies of mine. So let's go. There are few ways that you can make a nice return on crypto. I will go over a few of them that I believe are the best and easy ways. One of them is investing, which is pretty much speculation on the price of the asset. The other one is what I call supporting the network, which means that you either mine crypto that are using proof of work protocol or stake the other coins that are using proof of stake protocol. Last but not least is lending the crypto asset you already have. I will show a few platforms that allow users to do so, and this strategy can be very useful if you have digital assets for a long term and you don't have any particular use for it as of now. So let's start by talking about long-term investing. Here you can invest in assets that are already available to trade, like the assets listed on the major exchanges. I use Binance, which is an Asian exchange based in Tokyo, and Bittrex, which is an American exchange based in Nevada. Those exchanges are major exchanges and they are very popular among crypto community, which means that most assets have enough liquidity to execute smooth trading. Let's look at the Binance over here. As you can see, Binance and Bittrex don't allow USD trading, which means that you cannot use USD to exchange it for some alternative coins. This means that you would have to have either Bitcoin or Ethereum, or in case of Binance, BNB coin, to exchange it for other crypto. USDT is a crypto coin called Tether, which is used to hedge your investment, and it is basically an equivalent of USD dollars. So one of the ways of obtaining such assets like Bitcoin or Ethereum is by buying Bitcoin on Coinbase. Coinbase is an US platform that allows you to deposit USD to the exchange, and then you can exchange it for major coins like Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Coinbase is pretty simple to use and very intuitive. Also, their USD wallet is FDIC insured. The one downside of Coinbase is that it has pretty high fees. However, those fees are very comparable to other services like Gemini, Kraken, and many more. If you decide to use Coinbase, please use my link in the description. By using that link and spending your first $100 on crypto, you will get $10 worth of Bitcoin deposited to your account, which will help you to cover your initial fees. Another way is by investing in ICOs. So what is an ICO? The term derives from an IPO, which is initial public offering. And initial coin offering, in this case, is used by startups to bypass regulated capital raising process required by banks. In an ICO campaign, a percentage of cryptocurrency is sold to early backers of a project in exchange for Bitcoin or Ethereum. To invest in ICO, you would have to research particular project and sign up for it on the website and go through a KYC process, which means know your customer. They will probably most likely require you to submit some ID documents and verify your identity. This particular investment can be very risky because you can't be assured that your particular ICO will be the next big coin. Over the past, some were just simply scams, where the developers just took the raised money and ran away. But some that are with solid tech and community behind them can generate significant return. Here's just a web page that shows some of the most growing ICOs since the issuance, like NXT or IOTA, which generated crazy returns for investors in the past. Also, by long-term investing, I mean that you buy this particular asset and hold it for a long time, possibly a few years before selling, especially in case of ICOs, where those offerings are used to raise money to build a network which can take years in some cases. The other way of investing is a short-term trading. Here, by utilizing your technical analysis skills, you could make a significant return in the short term. This strategy, if utilized well, can be very good. However, many early investors, are losing more money than they are making because of the FOMO buying or FUD selling. FOMO stands for fear of missing out. When you buy a particular asset that is already growing exponentially, and FUD is standing for fear, uncertainty, and doubt, which means that you are selling an asset that is losing in a value significantly. Basically, greed and fear are the emotions that drive the decision of early investors. And sometimes those emotions will result in buying something high, like on this picture, and selling something low. I know it because it happened to me too. In this scenario, it is useful to really understand the technical analysis. You can watch my intro to a TA here in my channel. In my opinion, if you are an inexperienced investor, it is better to invest in something long, which means that you will go on the website, research that particular asset, and see if they have a solid tech and good community behind them. Alright, there is another way of making a nice money on crypto by doing mining. So let's talk about mining. Mining is a way of verifying transaction and a way of finding a new block to a blockchain. By doing so, you are rewarded with some coins depending what network you support. Mining or staking have a reward as an incentive to run the network. Without those incentives, the network would not be secure and most likely fail. Usually mining requires expensive hardware like this, which is an ASIC miner, and it doesn't guarantee the profit because electricity consumption and costs are usually high. In this case, you could outsource and do cloud mining. When you purchase a contract for some company that has access to a cheap electricity, I'm using Hashflare for mine, but there are other platforms. Usually you would have to purchase a yearly contract, and you can invest as low as $2.20 to purchase 10 gigahashes per second. In case of Bitcoin mining, that is using SHA-256 algorithm. I find this as one of the most stable returns, where your return is not dependent on the price speculation, but you can actually see a number of coins flowing into your account. Then you could reinvest them and so on. Let's look at the basic calculator over here, which will calculate your returns in investing in Hashflare. Let's say you have invested $500, which will give you 2,273 gigahashes per second. Your revenue at the end of the year would be about $1,000, excluding maintenance fee, which is $0.0035 per 10 gigahashes a second per 24 hours. And it also assumes that the price will not grow but stay where it is now. If you would like to use Hashflare, you can find a link in my description. The other way of supporting a network is by staking coins that are utilizing proof of stake protocol. Here, wallets have to be open to support the network in creation and verification of a new block. You can do wallet staking like NEO, which I really like. By staking NEO, you will get gas in return. Gas is a token used in the NEO network to fuel the smart contracts. So people are using it to deploy some smart contracts, and you can sell your gas that you obtain for free to those users. In some other networks, you could purchase Masternode, which is just a node or wallet that has to have X amount of coins in stake. Those masternodes can generate nice return, some even more than 100% in coin terms, excluding their USD price growth. You can check them out here. I know they are pretty expensive, especially Dash, a popular privacy coin, which one coin now costs about a little bit less than $800, and the masternode about $800,000. But 1 year ago, you could purchase that masternode for 10 times less. So to become a masternode, you would download a client and deposit the required amount of coins to your wallet. If you don't have enough money for this kind of investment, some networks allow you to lease your coins to a staking pool, like in case of Waves, where the returns would be shared among people that leased out the coins. There are some other ways of earning money on crypto by lending your coins on platforms like Atlend or Salt, where you could lend your coins to other investors and they would pay you interest on that borrowing. I have not used those platforms yet, but I'm planning in the future. I'm very interested in trying out Salt. Why would anyone want to lend their coins? Now just imagine you have a coin for a long term and you don't have a use for it, but you are just speculating on the price. This makes sense to lend out it to someone that would either use it in some way, either for trading or some other investment strategies. At the end, I would like to talk about some simple strategies, not in depth, but just simply explaining the basics. I would say that when you invest in crypto, diversification is very important, as in every market. Diversification strives to smooth out unsystematic risk in a portfolio, so the positive performance of some investments neutralize the negative performance of others. Therefore, the benefits of diversification hold only if the securities in the portfolio are not perfectly correlated. So in this case, you want to have coins in your portfolio that are not aiming towards the same markets. You would probably like to purchase coins, one coin that is designed for enterprise solution and the other coin that is maybe designed for privacy. Of course, you may say that, wait a second, I could put everything into one undervalued coin and make a 10,000% return in 2 years. Well, it could happen, but do you know that coin that will grow so much? You might be lucky and get it right, but if you don't and your coin will decrease over those 2 years, then you ultimately will lose money. I will talk more about diversification in other videos. Here I would like to focus on two ends of different strategies. One end is conservative and the other end is high risk. Conservative would be a low and steady return, like investing in some well-known cryptos like Bitcoin or Ethereum. High risk strategy is definitely investing in some low cap coins, like those between the 200 and 400 place according to market capitalization. You can check them out here. And on this website basically keeps track of every coin that is on the market. Anything lower than a 400 place according to market capitalization is very, very risky, and I wouldn't recommend it because either those coins are already dead or they don't have enough support by the community behind them. The other high risk investment is obviously buying an ICO. You can check out upcoming ICOs here. So here are just examples of those two strategies. In the first example, we will look at the conservative strategy that I would use. I definitely would like to invest in some well-known crypto, like the top 25 according to market capitalization, and maybe I will put 50 to 80% my investments towards them. I would also maybe invest some little portion of my portfolio into ICOs that I really believe in. Or maybe you could invest in some low cap coins, like 100 to 300 market cap coins. Also, if you're a conservative, you would like to do some mining or maybe staking in some well-known cryptos. More risky strategy is the one that you would invest in low cap coins like 200 to 400 place according to market cap, and you would put about 50% of your portfolio towards them. I would also invest in ICOs, about 10 to 40% of your portfolio, depending how risky you want this portfolio to be. And also I would invest in some high cap coins just to balance out my portfolio, and I would put about 20% of my investments towards them. Mining or staking not well-known coins can be very beneficial. If you know some good mining coin that doesn't have enough community behind them, it might be very beneficial to start to be the early miner and see the value of the coin grow. At the end, I would like to point out a few very important things. One of them is to keep track of your portfolio. There are plenty of apps to do so. Personally, I use Excel spreadsheet that I'm currently developing myself. I will share that with you in the upcoming videos. The other one is to reinvest your earnings from mining, lending, or staking, which could significantly improve your return on your portfolio in the long term. Remember to spread the risk. One thing I forgot to mention here is that if you go long, maybe it is good to have a good wallet, like hardware wallet, maybe paper wallet, or some solid software wallet where you have a control over your private keys. If you have something long-term, don't leave it on the exchange. where you don't have access to your private keys, and your investment can be stolen by hackers, like it happened in case of Mt. Gox, or maybe recently in case of Coincheck. You can read about this in this article. In case of Coincheck, the exchange wants to refund the users that got their portfolio stolen. But this wasn't the case when Mt. Gox collapsed. If you have some short-term investing, maybe it would be a good idea to have at least 2 accounts on 2 different exchanges. So if one gets hacked, you won't lose everything. Thank you for watching. I hope you enjoyed that little presentation. If you did, you can check out my other videos, or you can subscribe to my channel. If you have any question or thoughts, you can post them below in the comment section. And that's it for today, and I'll see you soon in the next video.